Singapore insurer Income is exploring the potential of a share buyback program among the options to ensure shareholder liquidity. And this was revealed at the company's annual general meeting by outgoing Chairman Ronald Ong. Nicolas Ng reports.
NTUC Income's 2025 annual general meeting took place at Star Vista behind me. In their opening speeches, Chairman Ronald Ong and CEO Andrew Yeo spent about half the time addressing concerns around corporatization and the failed Income Allianz deal. Mr. Ong reiterated that if the offer went through, shareholders would be able to unlock the value of their shares at $40.58 per share. He adds that Income is keeping its options open, including a share buyback program, and will update shareholders of any material development. But that response was not good enough for some shareholders that I spoke to. They told me that their primary concern was in liquidating their shares, and Income had failed to give direction. One had even described the event as hugely disappointing. There was also anxiety around transferring their holdings to the next of kin, and frustration around the block deal, which would have been their chance to cash out. Income CEO promised to keep the focus on growth this year, from expanding the sales force to doubling down on investment-linked plans, and introduce more funds and products in the months ahead. He adds that Income is also prioritizing higher margin plans and improving efficiency through repricing and better claims management. And to mark its 55th anniversary, the company's board of directors has also recommended a special dividend of 20.8 Singapore cents per share.
Let's take a look back at the Allianz Income saga. It drew huge public outcry when it was first proposed in July last year, with many questioning what the deal could mean for Income's social mission. One of them was former NTUC Income CEO Tan Swee Chea, who voiced his objections in 2 open letters to the Monetary Authority of Singapore in August. Income assured Singaporeans that it would continue to keep premiums affordable, with the Labour movement pledging to hold the insurer to its commitment. And the issue sparked a fiery debate in Parliament, the central bank making its stand that Income was expected to fulfill its obligations and would hold Allianz accountable. Less than 2 months later, in a parliamentary sitting, the government blocked the deal, deeming it to be not in the public's interest. An amendment to the Insurance Act was also made. In December, Allianz officially withdrew its offer, citing respect for the government's decision, while Income said it would explore other options to strengthen its financial resilience. Now, the failed deal also became a hot topic at the general election, with opposition parties calling for more accountability from Labour chief and Jalan Kayu candidate Ng Chee Meng. In response, Mr. Ng said the deal was done in good faith and that NTUC would learn the right lessons and do better. Since April this year, Mr. Tan Swee Chea has written twice to MAS, questioning its oversight and asking for a meeting with Deputy Prime Minister Gan Kim Yong. MAS has rejected his request.